Hey traders, Todd Gordon here with TradingAnalysis.com. This is CNBC's Trading Nation. Traders, let's go to work on Netflix. Netflix is pending breakout right now on strong news that they just raised prices in their top two tier service levels by 10%. So prices are going up at Netflix, and so is the price of the stock. So let's dive in. We are also looking at earnings coming up on the 16th. Implied volatility is quite high, so potentially a good setup here. Let's go dive in. So here's the chart of Netflix. This is the daily. And before we get into the earnings, which by the way are on October 16th, take a look at what prior earnings events have done. It's sometimes in technicals and trading, you just the simplest and most logical analysis sometimes is the best. So take a look at what Netflix has done around earnings. So what you'll see is Netflix rallies up into these earnings, and the earnings are denoted by this E. We rally up, head into earnings, then sell off. Rally up into earnings, kind of consolidate, don't really sell off in this one. Same thing, we rally up into earnings, a smaller rally here, sell off. And now we're doing the same thing in the last earnings, rally up, sell off post earnings. So it looks like we're in this rally phase heading into the next earnings. For this trade, as we set this up, based on history, looks like we need to be out right around the earnings. Don't hang around for it, okay? So as you zoom in here just a touch, you can see that Netflix is trying to break through this triple top, which there's a lot of potential energy here set up into this stock. The news behind it, as I mentioned, they're raising prices, so they have obviously pricing power. The other part that I'll mention here is take a look at the implied volatility. We love using that as our filter to determine if you want to be buying options or selling options. And every time you get this spike in implied volatility, that's right around earnings. You can even do a little bit of technical analysis on the implied volatility, and you can see we are coming up into the ceiling, which is resistance. So with a bullish outlook in Netflix, coupled with overbought volatility, heading into earnings, we have pretty good reason to say, let's get long. So as we zoom in here just a touch, okay, we can see that we are in the process of breaking out here. So let's first establish where we're going to be wrong in this trade. As a trader, you don't want to think about how much money you can make. You always want to be actively managing risk and figure out how much money could we lose. So where I view us to be wrong, let's say this breakout above the high, this must be the third. So right about the $186.70 mark, that's going to be the point at which support must hold, or else I want to get out of this trade. I think a breakout is happening pre-earnings. If we get back below this candle right here, we're out and we're wrong and simply contain the risk. Otherwise, we'll move higher. So now what I want to do is sell a put right around the current market, just about $190. We'll go ahead and pair that up with a purchase that corresponds to the high of this candle right around the 185. So buying the 185. So we're going to be selling a 190, 185 put spread right around the earnings expiration. So we're going to go ahead and do the October monthlies that expire on the 20th, okay? The earnings again are on the 16th, so we'll probably need to be out before if the trade is not working, or if the trade is working, we have nice profits, go ahead and take it through earnings, realize there's a huge gap risk, but then look to quickly take the earnings trade off after the implied volatility drops post-earnings, which is very typical. Now, the expected move around the earnings currently is $18.30. So as we head in on the 15th, you're going to add $18 on the top side, $18 on the bottom side. That's the expected move according to the options market. Now that's going to fluctuate as we get closer to earnings, so just bear that in mind. So here's the trade we're looking to do. Sell the $190 put, buy the 185. Altogether, we can collect $2.15 or $215 credit right now for this trade. So that's our max profit. Our max loss, if the trade goes completely against us and we hold expiration, is $285. But if we manage properly, we shouldn't have to expose ourselves to that kind of loss. So let's go ahead, put the trade to work. And that trade is now working. So that is the trade in Netflix, guys. Be sure to use those stops. Always adhere to your risk management rules here in Trading Nation, and we're going to leave it there. Be sure to follow us at Trading Nation on Twitter for updates to this trade as well as all the other trades our traders are watching, and we'll see you guys on the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.